G'day folks, welcome to the weekly general update for the 1st and 2nd of October. Now, the last few months really have been pretty much the toughest trading conditions you're going to find. Volatile sideways markets are just the most difficult conditions that you could possibly try and trade under. And you may recall some stats that I put in the weekend alerts last weekend, I think it was, about the number of 200 plus up or down days, in the Dow Jones in the States, and we had I think it was 4 in the first 7 months of the year, and we've had 16 in the last 7 weeks. So that really just underscores how incredibly difficult it has been to trade this market. So I understand it's been a tough couple of months, but look, that's just how markets are sometimes, and we just have to wait it out and know that there's always much more productive trading conditions just around the corner, and I think that's especially the case now. So on a bigger picture view, and I've been doing this for a long time, now's the time when most people start thinking about quitting or have already done it, because it just seems like the game of trading is just too hard, and it's really that dynamic of people starting to progressively chuck in the towel that really creates the foundations for the next major move, because you can't really have a major move until you've got rid of most of the weaker sellers, and the market has declined to a level where valuations are incredibly appealing, and then the smart money starts to come in and the market goes up. I mean, it's just the only way that it works. And I think we're getting fairly close to that point now where, a lot of people are kind of chucking in the towel. We're seeing in the States some of the statistics there. There's record outflows of funds from the managed funds area in the States, and a lot less retail investors involved. So that process is well underway, and some of the valuations are really highly attractive. So I think we're very close to that point. And if you think about the psychology around the market, then you realise what I'm saying is correct. That you've really got to get a bit of a panic in the market. You've got to get a point where a lot of people tend to give up and just think it's too hard for you to really open up for the next move. So now it's really important to stay focused on what's coming, because I think we're getting quite close to that. I'm doing a huge amount in the background that you don't see in terms of both fundamental analysis and technical analysis, so that we can make the most out of these conditions. I'm using every tool that I've got at my disposal, and the more that you can understand what it is that's going on in the background, you don't have to do it, you don't have to understand it fully, but at least if you have a sense of the amount of work that's going on in the background, then it will help you to more confidently execute when the time comes. So it's really, really important to come along to the monthly session, all monthly sessions, but particularly this month. I know that you can watch it later because we record it, but the question is, will you watch it, and will you watch it with the same focus that you would bring if you were necessarily there sitting in the audience? So look, I think we're really on the cusp of some really exciting times, and I just urge you strongly to to come along to the monthly session, to do whatever you need to do to stay focused, because this is really the time when you can make some serious money. So let me get on with it after that bit of a commercial. Just a reminder, this is general advice only, and you need to make sure that the trades that you're taking are consistent with your trading plan and are consistent with your level of risk. You don't necessarily need to be doing everything that I'm doing here. So the action for last week, we saw the S&P 500 roughly finish flat for the week, and that was really a pretty poor Friday. It was up most of the week, but Friday was down more than a couple of percent. So I still think we're in the final leg down for now, and particularly if we get some money printing or a few positive decisions coming out of Europe, I really think markets now are cheap enough that we'd really see them take off. We'll have a look at that chart in a minute. So on the S&P, I think 1080 is probably the most likely target, but if there was a bit more of a panic, we could see 1020. The ASX 200 closed 100 points higher for the week, and that was really just a timing issue. Our futures now will probably be down, getting up towards 100 points possibly. So on the open on Monday, we'll probably be little change from where we started last week. We're trading in the middle of the trend channel at the moment, but as I indicated, Monday will be down. So I've got a target down around 37.90. If that fails to hold, then we could see lower levels from there. Pardon me. Gold closed down $30 on the week, and the C leg may be complete, but I'm still not completely convinced about that yet. We might need a few more weeks yet to really consolidate. Silver finished down about $1, and it is heavily oversold at this point, but you will notice that the gold and silver ETFs are actually doing much better than the metals priced in US dollars, because the Australian dollar's fallen, and so that's helped to hold those prices up. So that's done reasonably okay. So let me just have a look at this is the chart on ETP MAG. So you can see basically over the last week it's pretty much held its ground after that big sell-off on Monday. So let's have a look at some charts. First of all, the S&P 500 index. You can see we've got our A leg down here in green. We've got our B leg heading back up in purple. It's starting to get quite extended, and you can see the incredible level of sideways volatility. These red and blue bars, these are huge days, and we're just seeing them, day after day after day. But yet the market's not going anywhere. So that's really why the conditions have been so difficult. Just look at the length of these candles compared to, let's say, up in this area here back a few months. And back in those days we would get 10 or a dozen days in a row that trended in the same direction. Look here, we get 3 or 4 days at the most when it goes in the one direction. So very difficult. Now, the longer this stays above 1100, the more likely it is that 1100 is the low. But as I said, I'm still leaving the door open for either around about 1080 or possibly down here around about 1020 area. So we'll just have to watch and see what happens with that market. Now this is the Aussie index, the ASX 200. You can see strong downtrending channel. The price is currently sitting about the midpoint of that channel. It will be down closer to between 3,900 and 3,950 on the open on Monday, and so we've got the low from early August, about 2 months ago, down here at 3765. So it's possible we could get down to that area to retest that low. So again, we've just got to let the market play out, but I think at the moment it's prudent to have a bias to the short side of the market. Now let's have a look at gold priced in US dollars. So again, here's our A leg down, our B leg up. A bit unusual, it went a bit further than normal. And now we're in the C leg correction. We've got potential targets here at around 1560, which really ties up with the panic low from last Monday. We've got the possibility of 1438, which would also correspond to this long-term trend line that we've had. So gold has been following this trend line for some time. So 1550, 1560, or about 1450 would be the areas I think on gold. It's pretty oversold at the moment, but I think one more dip down would be great actually, because it would really create some terrific value. So we're not far away on gold yet, I don't believe. Now something weird has happened with my silver chart, so I can't show you that one, but it's basically been flat the last few days. Now the other chart that I wanted to show you, just make mention of, is the chart of copper. And copper has been was trading around about the $4 mark, was holding that really well until about 2 weeks ago, and then it's just really fallen quite heavily. Copper down 25% in the last 10 days. You can see it's broken through, just sliced through all of those retracement levels, and so the possibility of copper going down further down to 275 is quite on the cards. So that won't be particularly flash for small cap stocks outside of gold, I would imagine, because a lot of people are looking at that and reading that that the world economy is in trouble. As I wrote in the daily alerts this weekend, I think more than ever there's now a huge difference between the paper price and the real supply and demand around the world. I think the paper price is being belted down for reasons of liquidity, and it's probably got far less to do with the health of the global economy now than it used to. So I think that's a less reliable indicator. Okay, so just moving on to our looking at our other major stock areas, and as you're aware, we've been looking at some of the American banks, and we'll have a look at Bank of America, which has been sold down extremely heavily, and you can see looking like it's about to perhaps break lower yet again. So I'll cover more of that in the specific update for members when I do the specific portfolio and chart updates. Let me just shoot back to the original presentation. So the strategy from here on a bigger picture view, it's broadly the same as it was last week. For stocks, we're looking at maintaining a bias to the short side, being prepared to buy the panic sell-offs in selected stocks because we are already at some exceptionally good value, particularly with stocks like BHP and Rio, for instance. So be prepared to buy those panics. When it comes to gold and silver, I'll certainly be looking to add a bit more to the precious metals ETFs, but certainly looking to accumulate gold producers progressively, and I will be talking about that again on Wednesday night. So that's it for this week's general update. As I said, it's pretty exciting times. Now's not the time to lose focus on what you're doing. Now's the time to really make sure we've got very little open at the moment, so we're beautifully positioned to take advantage of it. So just retain your focus, and I think we're going to have a pretty good run into the end of the year. So that's it for this week's general update. Cheers.